On today's Make the Deal, are you a speculator or are you an investor? I've recently been having conversations with clients and colleagues about where we are in the market cycle, and this begs a much more fundamental question about you as someone who, if you're watching this show or listening to it, is looking to create their wealth through real estate investing. And that is, are you a speculator or are you an investor? A speculator looks for quick value creation and liquidation through strategies like develop and sell, fix and flip, distressed and transitional asset repositioning. And the advantages are that you can create large profits in a short period of time, which then allow you to build your track record to then attract capital to your platform and strategy. And that allows you to scale a lot more quickly because now you're using fresh capital as well as recycling the capital from your investors who have seen returns on their investments. The risks, of course, include that you're much more sensitive to the movements of the short-term market cycle. So in a down market, of course, you're dealing with a fixed asset with which you can get stuck or see a loss of value. And then, of course, with an up market, you will suddenly find that the strategy that you were executing on is no longer viable, or there are just no deals that you can really get to deliver the kinds of returns that you have. So you want to keep in mind a couple of things. First of all, it's good to know and understand what a lot of the institutions are thinking about where we are in the market cycle. Banks, debt funds, equity funds are all built for the short term in most cases, and they're closely monitoring what's happening in real time. And so it's good to know what they're thinking about that. Now you might say, DB, they have differing opinions, and that's true, but you should learn about those and try to make informed investment decisions for yourself. The other thing is, you want to be able to justify your deal or strategy. When you're pitching a capital source on your investment, you want to be able to answer a question for them, and that is, why is your deal superior to a more liquid REIT or institutional fund that offers an easier exit? The other thing is, you want to be very prepared with a plan B. The short-term markets could move against you, and while it may be a gully, it's also something with which you want to have a plan to preserve the investment value as well as be able to deliver an exit at some point in some kind of way. Now, investors are much more tuned to the long term, and they have a wider strategic option in terms of assets that they can invest into, including cash flow and stabilized assets, as well as developing and transitional assets that they can then hold on to over the long term. And the rewards there are that they have stabilized cash flow distributions through the life of their deal with the possibility of value creation. You also have wider and cheaper debt options associated with your deal. You can also refinance your deal maybe one or more times, and that could result in both the return of your initial investment as well as seeing distributions on your investment, which are tax-free, of course. And the other tax benefits include depreciation and long-term capital gains. And then you're less sensitive to the short-term market movements as a longer-term investor. Of course, the downside here is that you're dealing with high-priced, big-ticket fixed assets that suck up liquidity, both yours and your investor base. And so you have to ask yourself, are the deals in which you're investing going to be enough to provide a livelihood for you? And as well, how much dry powder does your existing investor base have to continue financing the deals that you're going into? Because if not, you may find yourself without investors at some point because they're all waiting to harvest the deals that you've invested their capital into. While you don't necessarily have to define yourself as a speculator or an investor per se, some deals just simply warrant one strategy or another. It is important to think about the larger economic drivers associated with each strategy and not get caught up in a lot of these conversations that people are having without that kind of context. Finally, if there are any questions or topics you'd like me to discuss in future episodes, then feel free to hit me up on my socials. Otherwise, I'm David Blatt, and I'll see you next time.